The vibe is still off between Canada and America when it comes to trade negotiations, Donna?
It's difficult. It's very difficult. Costs are going up all the time. Families have to eat. They have to feed their kids.
What happens when a nation tries to play hardball with its biggest trading partner? What if a bold political move meant to look strong ends up emptying grocery store shelves, driving prices through the roof, and hurting the very families it was supposed to protect? That's exactly the storm Canada has walked into after deciding to boycott American beef. On paper, it was meant to sting the United States. In reality, it has left ordinary Canadians paying more at the checkout and butchers scrambling to keep their doors open. Chapter 1. The boycott that backfired. It started with a spark of political defiance. Canadian leaders thought they could send a message by refusing to import U.S. beef. The idea was simple: punish Washington for tariffs, prove Canada could stand tall, and maybe even score a few political points along the way. But what looked bold in a press conference has turned into a daily nightmare for families trying to put food on the table. Walk into any butcher shop in Toronto or Vancouver today, and you'll hear the same story. The prices are shocking. Cuts of meat that used to be affordable are now treated like luxuries. Some butchers have watched prices triple in less than a year. A turkey breast, once a staple for holiday dinners, is suddenly 80 to 90% more expensive than just a few weeks ago. For families already stretched thin by rising living costs, it's a crushing blow. Stanley Yanichuk, who runs White House Meats in Toronto, put it bluntly: families still have to eat. They still have to feed their kids, but it's getting harder and harder to do that. And he's not exaggerating. It isn't just beef. Poultry, turkey, and even processed meat products are caught in this wave of inflation. For small businesses like Stanley's, the ripple effects are relentless. In the past, suppliers would give shop owners a heads up before raising prices 2% here, maybe 5% there. Shopkeepers could adjust and customers could plan. Not anymore. Now, invoices arrive weekly with sudden price hikes that nobody saw coming. One week, the cost might be manageable. The next, it's unbearable. Imagine running a business where every delivery feels like rolling the dice. That's the reality Canadian butchers are facing. And the root of the problem isn't just global trends. Yes, droughts in North America have reduced feed for cattle. Yes, global demand for meat is rising, with experts warning that by 2030, the world will be short by the equivalent of 5 times Canada's entire national beef production. Those factors matter, but they don't explain why Canada is hurting more than its neighbors. The truth is that Canada's boycott of U.S. beef has boxed the country into a corner. By cutting off one of its biggest and most reliable sources, the government has limited supply just when demand is climbing. Meanwhile, U.S. beef producers haven't missed a beat. They simply sell to other markets: Asia, Europe, South America. America first, as leaders proudly say, and it's working. While Americans continue to access a steady supply, Canadians are staring at half-empty coolers in their grocery stores. It doesn't help that Canada's own beef industry is controlled by just a handful of big players. 2 companies dominate most of the market, operating only 3 major processing plants. When so few hold that much power, competition disappears, and small shops are left paying whatever prices are handed down. It's a fragile system, and the boycott only made it weaker. For ordinary families, the result is heartbreaking. Parents stand in supermarket aisles, doing mental math to figure out if they can afford steak this week or if they'll have to switch to lentils. Holidays are suddenly more stressful as traditions like a Thanksgiving turkey become luxury purchases. And every extra dollar spent on meat is one less dollar available for rent, gas, or school supplies. For small businesses, the pain cuts even deeper. Butchers and grocers live on thin profit margins. When the cost of meat skyrockets, they can't simply pass it all on to customers. People would stop buying altogether. Instead, shop owners like Stanley are forced into a balancing act: raise prices enough to stay afloat, but not so high that customers walk away. It's a dangerous tightrope, and not everyone will make it across. The saddest part is that none of this had to happen. Canada's leaders framed the boycott as a patriotic stand, a way to show strength against foreign pressure. But what's patriotic about parents skipping meals so their kids can eat? What's strong about small businesses closing their doors? The move that was supposed to hurt the U.S. hasn't fazed Washington. Instead, It's ordinary Canadians who are paying the price literally. The irony is hard to ignore. While Canadian families are struggling, U.S. producers are thriving. Tariffs and trade disputes were meant to weaken America's grip on the market, but instead, they've highlighted just how resilient the U.S. system really is. American beef is still flowing, just two different buyers. American farmers are still supported by policies designed to put them first. Meanwhile, Canada is left grappling with food inflation that shows no sign of slowing. The message is clear. Boycotts and political stunts may grab headlines, but they rarely put dinner on the table. And in this case, they've made dinner more expensive than ever. Chapter 2. Inflation, Shortages, and the Bigger Picture. The rising cost of meat is only the beginning. What started with beef has now spread across the grocery aisle. Dairy, poultry, even vegetable oils are being swept up in a wave of price hikes. Families who once built their weekly meals around affordable staples now find themselves staring at totals that climb higher with each checkout. The statistics tell the story clearly. Meat prices have jumped more than 6% compared to last year. Dairy has surged by 20%. Even vegetable oil, a basic ingredient in countless recipes, has risen globally by nearly 18%. And yet in Canada, canola oil prices have actually fallen thanks to an oversupply. On the surface, that looks like relief, but it's more of a quirk than a solution. The rest of the grocery cart keeps getting heavier on wallets. Economists point to familiar culprits: fewer cows in North America, droughts that leave less feed for livestock, and a global population that demands more food every year. These aren't temporary problems. By 2030, experts predict the world will need 5 times more beef than Canada currently produces. That gap can't be closed overnight, which means higher prices are not a passing storm. They're the new reality. But here's the twist. While global conditions explain part of the pressure, Canada's leadership has added fuel to the fire. By boycotting U.S. beef, Ottawa narrowed the country's options at the worst possible time. Instead of finding new solutions or boosting domestic production, the government leaned into political theater. And now, Canadians are left carrying the consequences. Take Marlon Rosenbaum, another Toronto butcher. He sees the crisis unfold with every order he places. What used to be a routine delivery now feels like a gamble. Sometimes he pays a little more, sometimes a lot more, but almost never less. For him, it isn't just about balancing the books. It's about survival. Each sudden jump in costs forces him to decide: raise prices and risk losing loyal customers, or absorb the hit and risk going under. Neither option is sustainable, and Marlon isn't alone. Small businesses across the country are trapped in the same cycle. Unlike big chains, they don't have the leverage to negotiate better deals or the volume to cushion losses. If the trend continues, many independent butchers could disappear altogether. That means fewer local options, less competition, and even higher prices for consumers. Meanwhile, the Canadian government seems paralyzed. Instead of addressing the root issues like the concentration of power in a few massive processing plants or the need to expand domestic cattle production, they've doubled down on rhetoric. Leaders talk about resilience and independence, but their policies have left the market fragile and exposed. Compare that with the United States. Washington made no secret of its America First approach, especially when it came to agriculture. Tariffs were tough, yes. Farmers complained, and consumers felt some short-term pain. But the difference was that the U.S. had a strategy. It built alternative markets, kept producers afloat, and prioritized food security. Today, those choices are paying off. American beef keeps moving, American farmers keep producing, and consumers see a level of stability Canadians can only envy. The Canadian approach, on the other hand, looks less like strategy and more like stubbornness. Instead of protecting families, it has left them vulnerable to every shock in the system, be it drought, demand spikes, or foreign tariffs. The boycott was supposed to make a statement. All it has really done is make dinner more expensive. And this isn't just about food. Inflation touches every corner of life. Gasoline prices fell slightly last year, but not enough to offset rising costs elsewhere. Rent is climbing. Utility bills are higher. Parents juggling mortgages, school fees, And groceries are asking themselves a painful question. How much longer can we keep this up? The Bank of Canada now finds itself in an impossible position. Inflation is creeping close to 2%, and the pressure to cut interest rates is intense. Cutting rates might give households a brief break, making it easier to borrow and spend. But it also risks fueling inflation even further, creating a cycle that becomes harder and harder to escape. It's a high-stakes gamble with the economy itself as the prize. Critics argue the government has been too focused on optics and not enough on outcomes. They warn that if leadership doesn't shift priorities soon from political games to real economic solutions, the cracks will only widen. A fragile food system, heavy reliance on a handful of corporations, and strained families are a recipe for long-term instability. But there is still a sliver of hope. Butchers like Marlin cling to one belief: quality. They know that customers value well-sourced, high-quality meat, and they trust that loyalty will keep them alive through the storm. Farmers in provinces like Alberta and Saskatchewan argue that if government red tape were reduced, they could scale up production and ease shortages. The potential is there. Canada has the land, the resources, and the talent. What it needs is leadership, willing to unleash it. Still, time is running short. Every month of delay means more small businesses shutting their doors, more families tightening their belts, and more Canadians losing faith in the promise of a fair, affordable future. The longer Ottawa clings to failed policies, the harder the recovery will be. The irony is that the solution isn't even a mystery. Stability, clear strategy, and support for both producers and consumers, that's what works. It's the model that has kept the US afloat during trade wars and tariff battles. It's the model that Canada could adapt tomorrow if it chose to. The only question is whether its leaders have the courage to do it. Until then, Canadians will continue to feel the sting every time they walk into a grocery store. Every price tag will be a reminder of a boycott gone wrong, a political gamble that sacrificed households for headlines. And if the warnings about global shortages prove true, today's pain may be just the beginning of a much deeper crisis.